Okay. I thought I pressed the button. It should be there now. I was pointing out what a bearish island reversal is. Had the gap up into this pivot high and a couple of days hanging up there. Now you can see where it's gapping down to right now, gapping well below all of those lows and in the middle of nowhere as we look at the chart right here. And here's the unfilled gap. And prices had come down to that support and the gap up, and now leaving this data up there. And first support is down there in that gap fill. And then we'll see, if it stops from there, probably will, I would think. It's a pretty large distance to get there after the gap down. And by the end of the week, it'll be curious to see if it keeps moving lower and whether we get a negation of that weekly bar. And that's the unknown. So where is it right now? I'll just take a look. My screens are going a little crazy here. Something this happens with Zoom. So it's not even in the middle of that green weekly bar. So that's good. That's at least one positive. So whatever happens here, so far this is just short term. It's not negating the higher time frame. We'll see. There's more data tomorrow on jobs, so maybe it reverses. But just pointing out this pattern, and you also see it on the Qs here, which have been showing relative weakness. They were a little below that, and in addition to the reversal, you have this rejection yesterday where it was a move above those highs and left a little topping tail. And now we've got the confirmation of the gap down below that area. You can see where my cursor is. It's right on this pivot high here, but I wouldn't expect it's going to stop there in a meaningful way. So we've got a larger area of congestion. I'll drag this up here into this congestion area, which lines up with the rising 20 MA. Subjective, but the moving average is lined up with support. So those that look at the moving average, those that look at support, alignment, maybe there's some fib level there, some cloud arrangement, who knows what, that would bring in traders looking at different tools that might step them up in that area. So you can see all of this overlapping bars there. There could be a point of control or a VWAP. I don't know. There could be a volume histogram that lines up there. Whatever it is, prices are in this area. So this is where buyers should show up. Whether they can hold it there, that's what we'll have to see. If it can hold there. Right now, you can see the way it's going down. It's gotten a little mini climactic. So maybe it's beginning to stabilize there. We'll see if it pops up a little bit. But, starting out, this by itself, if this had exceeded this high with some, authority momentum, let's just say it was happening up here at 385 and we were getting that bearish island reversal, that wouldn't be as bad as making a lower high and being so close to what we refer to as major support. So the deeper it comes down here, which is certainly the potential of that is here because of this bearish gap and retest, there is that potential. So if by the end of the week we have a close down here, well, this is major support, the depth of that retracement is a negative. And when you think about that as it relates to multiple time frames and a sharp move up, you get a negation of the bar in the prior or higher time frame, which doesn't negate this, but you start seeing that there's consolidation going on of this gain. And at that point, it's like, well, will it break below these lows? And that just evolves into what we'll be seeing in the next several weeks. So right now, in this moment, we've got some bearish price action, and we'll see how far it goes. All right. You can see the futures, wide range bar because of no gap, 24 hours, pullback, retest, and that is bearish. And so far, it's negating this. Now, we always have two scenarios. What would change my mind? This is the concept of bar by bar analysis. And is the bar complete yet? Clearly, it's not. If at the end of the day, this is a bottoming tail bar, well, the whole mindset is going to change. But as this comes down to support, we'll wait to see what the reaction is to it. And if it can't bounce, then we assume it's going to go lower. I'm going to say lower to where? Well, to a more significant support area. But right now, we've got a little support there, and we'll see how this unfolds. So SPX, this is what we want to see for SPX. Like all of those really close ones, I think one of them went up to the level where we had picked that day. But now today, when things start to move down with some momentum, they start buying puts really deep, far away out of the money, looking for the home run. So we know prices are gapping down about here. We've got an unfilled gap. We've got a rising 20 MA. And yep, Jake's got what I got. 43.60. So this is where what I like to refer to is, do we have any lines of defense? Like what is in front of the strike that traders would buy into, that it would stop it from going down here, that we use the term, can it be a no-brainer? Now, if it was like, call it a different level of a no-brainer and there were strikes down here, which is not, we'd say no way in hell it's going down there today. But historically, based on this pattern, that's all we look at, historical patterns. What is the probability of prices getting down here, even with this bearish island reversal? I think it's pretty slim. But I think that's a good level, right, to be doing a put credit spread, and you can see whatever, look at them 20 wide, 10 wide, whatever you're comfortable with to collect that premium. Up above, probably not likely it's going to go there either. I don't know about 55, Jake, because there isn't enough premium there now. And even 50 is a little thin, 60 by 65. But if they get to bounce at the open, if you want to do the upside, to get above that 50 number would be ideal. That's pretty far away. And the ranges have tightened up, right, where the day-to-day ranges are about 30 points. So that's going to pick up in the coming days. All right, what else is happening here? Moving around, reversing back down. Looks like an M top in play here. We'll see if things can hold at that 20 MA. There's a whole big bunch of support over here. So typically, it doesn't stop here, right? It's stalled there, as you can see, as we look to the left, what we call minor support. But after this time going sideways and break, while it could bounce from here, to play a counter trend trade, ideally it's going to happen down here, somewhere down in here. So what often happens is, you would say, okay, if it comes down to those pivots, great. But there'll be buyers ahead of those pivots looking to get in and potentially average down as it begins to bottom. So it depends on how long it takes to get down there. That'll be the most significant support area. What are you saying? With significant or resistance expire 444, you bought 442 put yesterday. Okay, cool. All right, so someone asked in the room yesterday, because another person was, I don't know whether they were buying or shorting, the futures at the time was asking about doing a credit spread. And unfortunately, spiders typically don't have the premium on 0 DTE unless there's a really big move. Whereas with SPX, you can get that premium so far away. There's that leverage, like, God help you if it gets hit. So you better know how to manage it, get out of the way if you need to. But as things start to move with some momentum like we have this morning, those premiums get jacked up so much, so far away, that there's just that high probability that it isn't going to get there. All right. So retest, same pattern. Russell moving down, coming into some support. Same story here. Now, could this turn into what Dan has coined as a bull sandwich? And this is a range expansion bar, big red bar, big green bar, big red bar down. Things are starting to get kind of nasty. To have that is a very potent pattern when you have it with a range expansion bar. And we'll have to see at the end of the week. We already looked at the S&Ps, the Dow, coming down, already cleared its support and heading lower. It seems that the gap is going to close. Well, when things start to move down with this kind of momentum, anybody thinking long begins to back away, normal. And everyone starts to look at whatever they're looking at. We look to the left and say, hey, there's an unfilled gap down there. That's where there's a good probability that buyers would step up. Now, a little explanation about, when we get into teaching a course and what I call a thought process. Well, I've thought that probably hundreds of times, if not more than that, over all of these years. And prices didn't get there. You have a bias, you think something's going to happen. So what can you add to a method, a thought process? Well, that's the concept of support being created. What does that mean? That means that it forms a pivot. And this could be a pivot. 1, 2, 3. It hasn't marked that. Maybe I don't have that on here for the pivots. Anyway, this becomes a pivot after 3 bars to the left and right. And as it retests it, it could form a reversal. And that's the idea of creating support where there's nothing. So where this is, you can see it's in the middle of that gap. There's nothing there. And the price data is a little further below. So this could be traders beginning to step up in front of the gap. Well, little food for thought. All right. Dollar's starting to move up. Speed this up here. Gold is starting to move down. You can see, let's just flip over to here. You see the 10-year broke out. Remember, it was in this range. We've been talking about that for quite a long time, up above 4%. Ouch. This here is starting to flip back up again. The gold is starting to flip back down. Here's your dollar. The VIX is breaking out above here. So more things coming into alignment that this market is going to correct. Now, those of you that subscribe to the advisory letter, we went through tons of charts over the weekend letter, and we saw all of these bullish monthly bars, breakouts. So we have some negativity going on here. And on the monthly charts, we have some very positive things going on here. So until proven otherwise, I see this as just a correction, and the timing of that correction, at the end of the quarter, the end of the half of the year, and so on and so forth. There was the options expiration. All of this is relatively normal. Now, just how far this correction, corrects is the unknown, and we'll just have to assess that as time goes on. Oil is perking up here a little bit. So that's gold. Here's oil. But, it's been stabilizing. We've talked about this being the support down here and so on. So, yes, that's the gist of it. Some negative things going on that are relatively normal. We'll assess what shows relative strength, what shows relative weakness, and see how it all unfolds. To you, Dan.
Good morning. Great summary. The Dow 30, it's solid red. Microsoft up a few pennies. Got a couple of our alerts going off. I'll be focused on managing those. And we have a big portfolio of longs, but we've been in trail mode. As Greg said, so many things are extended. Now we sold puts on a couple things. Because that's how we cushion them being extended, and we'll take it at an improved cost basis. All the fangs are down. This Meta, a couple of us in the green room were buying that. That was my favorite. Starting as a day trade yesterday. They're competing with old Musk and his Twitter. And it was up pretty darn big this morning, almost 2%, 1.5%. But now even that's giving it up. Microsoft flat, the other things all down. So yeah, we'll just be patient here, deal with the opens, see if we can start selling some call spreads. IIPR bottom right. I had set an alarm yesterday, and my alarm just went off here. If this does open up at $75, then that is a beautiful gap candidate for 5, 10, 15, 30-minute high. But it's not liquid, so I really don't trust it. But if it does, I have it here in the bottom right, because then it would be a gap breakout if it can hold the 75 level and showing relative strength. Anything green, when the markets get huge down like this, is relative strength. And so I was looking at our opens, and we actually do have naked puts on MSTR. This was in last weekend's letter, and they're way out of the money, like 307.50, something like that. But it's one where we said we would take ownership if needed. Look at that beautiful monthly. So Bitcoin was up. It's come off, with the number, but that sector's holding really well. PLCE just saw going by the ticker. Relative strength, big old move off the low. It could set up for a day trade. Keep an eye on that. So now we talked about a firm got a downgrade. That's kind of a bear flag. 1442. A definite call spread candidate if there's any juice up there. We actually only have one open position in our weekly options trader. It's this UPS. Nasty gap down yesterday, and now I see it gapping down here more, so I'll be looking to tighten the stop on that. XOM, so they're gonna have to take a charge off, and I forget, maybe some natural gas transactions or something or other. So that's rallied and reversed at resistance. That's a call spread idea. Levi had earnings. It's opening flat. Based on yesterday's bearish breakdown close, my bias is to let it open flat, and this will be an awesome 30-minute low short if it cannot bounce. Just wait 30 minutes, hope it goes sideways. Short yesterday's low. Weight Watchers, Greg found yesterday, wide range bar scan. So ideally we'll get Levi's after the close. Oh, shoot. All right, whatever service I was looking at said it was before the bill. All right, well, thanks for that. PCG, another 1, 2, 3 candidate. And this would be a no-brainer. Naked put at 17. But I looked yesterday and there was no juice. Triple M. Yeah, I would like it better as a 1, 2, 3. It's down a lot though. Look at this big old fluid move from yesterday's high. So it's not, and now it's getting down 63 cents. It's just not an ideal entry, Thomas. But it is bearish all time frames. Upstart. Now here was an example. I have a huge list of stocks that are bullish weekly, monthly, but they're like this. They're up multiple bars at resistance. This is an example of greater than 100% retracement. We would never in your wildest dreams, buy over this prior high. That's just a retarded entry without some type of consolidation, retracement, continuation pattern. So there's nothing to do with this for a while. It's going to take many, many days to set up. Intel, Greg and I were talking about this over the weekend. We're wanting to see if it can get down here to 50 MA and reverse, and then we might be interested. Genie, bullish gap watch, 640. Well, it is a bullish gap, Dave, but the problem is it's still gapping within the trading range. So there's no price void. So I don't compare that to IIPR, provided it opens at 75. I said I don't trust this. But do you see the day and night difference? If this is gapping to 75 and can hold, this has a monster void here. Now this one's coming out of the bottom pattern where the other one was stronger, but I'm talking about a new trade idea. Hey, Charlie F has been on my list here. I got an alarm up here somewhere. So this is holding well. You got two little red bars ignored. This is what we call making the turn. So NOW gapping down. That was a put spread watch. Airbnb. I was hoping for some type of 1, 2, 3. I'm deleting it now. Rocket Lab, another example. I was looking for a pullback, a buy setup. So it's gapping to 580. I don't want it to go under 570 because then it's danger into bearish retracement. But it's on my watch list. I mean, you see, I call it pruning. I go through here and I have alarms and I prune them and I delete them if they aren't setting up the way I like. Now this one, SPG, the whole sector was acting bullish, but the entry was on this breakout little continuation thing. Excellent question, PD Duck. It's just something. Well, Greg, we'll look at it together. I don't know what to do.
Use so many images. You just have to look into where the alerts are and do it.
Yeah, later. So no, it's just something that it's a general starting point, PD Duck. It's when we have uncertainty in the pattern and we want to just give it time to see how it sets up and if it confirms our bias in the morning. And we use it both in terms of getting into a trade. Like go back here to IIPR again for the third time. I don't know if it's really going to gap here or not, but if it does, you have to decide. That's a fantastic gap setup. So how aggressive do I want to be to get in? Do you want to buy a 5-minute high, 2-minute high? Do you want to wait 15 minutes to see if it can chop around and buyers prove that they're not going to let the gap fill get slammed in its face? And so we use the 30-minute rule. And then also if something gaps under your stop, we say, you know what, unless it's another, like let's take Amazon, for example. So Amazon were long calls. It's gapping, it's gapping under these bars, but it's still holding this low. So I want to see what buyers will do at the open here because it's down a lot now. If it were in an igniting gap where I say, hey, I'd rather be short this thing. Why the heck am I waiting 30 minutes? Then we start making exceptions to the rule. All right, so a number of these REITs, but they were up too much of resistance, so they're just on my list, but I'm in no hurry to get in them. But I got a big list here of them. AVB, another one, SPG, Kim, CBRE, MCO. It's not a REIT, but here's another strong one. Look, bullish daily, weekly, monthly. That's up a lot of bars at resistance, and I'll be very curious to see now of how it holds today. In light of today's gap down, that will be an excellent tell. FDN, internet sector, daily, weekly, monthly look great. All right, we talked about those. QR, Tibla, little wide range igniting breakout yesterday, daily, weekly. This would be a fantastic 1, 2, 3. And I just had a team alert go off. We had a put spread on this, but we took our money, closed it at a dime yesterday. And that's how we manage these put spreads, credit spreads. You're an insurance salesman. And our goal is to try to get the premium and earn as much premium as we can, and then get the heck out of there. It's like a hot potato because we're trying to avoid gap risk. Daco's just been weak here for a long, long time. Look, daily, weekly, monthly are weak. So it's actually a sell setup, topping tails. I was going to put this in the weekend letter, but the only thing I didn't like is it's down a lot, number one. And then look over here, you got no price void. But if this chops around for another 1, 2, 3 weeks and can't bounce, then it can be a short on the monthly, even though it's down a lot, because then we have more data that of relative weakness. But it could set up here for a day trade short. BOH is a short, so that's a short idea. Got a couple of alarms going off here on my longs. CHX, C, what's this? CHX, there. All right, why did my alarm go off? We're not stopped out yet. So it must have been a bad tick. We're still in the third lot of CHX long. And our stop is I had an early stop, but that's why I had 31.20. Our posted stop is 30.98. So let's just keep the posted stop.